I have seen and heard so many people talking against short selling in Islamic finance. This is something I would like to explain in some detail because I believe that short selling is not a purely Sharia concern. Rather, this is something to do with regulation. In fact, I received a number of calls from my friends in Islamic banking and finance when short selling was banned or suspended temporarily on London Stock Exchange and some other exchanges in the Western world in the current or during the current financial crisis. And I told them that this actually proves my point. This is actually a regulatory concern. In normal circumstances, if short selling is taking place and it is not destabilizing financial markets, it should be accepted, it should be tolerated, and in certain circumstances, actually, it should be encouraged. Islam is not different on this stance when it comes to short selling. Why? Because short selling is actually something which is recognized in Sharia. People who are against short selling in Islamic banking and finance base their argument on the principle that Islam prohibits something which you don't own. And I would say that there are Sharia opinions which are actually against it. The most widely used example of selling something which you don't own at the time of entering into sale transaction is salam. While most of the scholars would say that salam is an exceptional contract in Islamic law, there are scholars who would say that no, actually this is not an exceptional contract, rather this is one of the recognized contracts in Islamic legal theory. Hence, if salam allows the transactors, a buyer and seller, to enter into an arrangement whereby seller is selling something which is not owned by the seller at the time of receiving the price, then if certain conditions are met, short selling should be accepted in Islamic banking and finance. And my last statement is very important. When certain conditions are met, short selling should be acceptable in Islamic banking and finance. And I have made this argument many times. I say that if short selling arrangements are structured in a way which fulfill Sharia requirements, then short selling is acceptable in Islamic banking and finance. Having said that, I repeat that short selling is not a purely Sharia concern, it is primarily a regulatory concern. If the regulator believes that short selling is destabilizing the system in a given circumstance, the regulator can suspend it for a period of time. Short selling becomes a Sharia acceptable way of dealing when certain conditions are met. If we structure a deal, a short selling transaction in a way which fulfills all the Sharia requirements, then short selling should be acceptable. A good example where a regulator played an important role in suspending something which otherwise was and has been acceptable in Islamic law is the case of the second caliph Umar bin al-Khattab suspending the punishment for stealing when there were some extraordinary circumstances in the city of Medina. We know that where there was a case of very extreme drought in Arabian Hijaz or Medina, and there was increase in incidents of stealing in the city, and the caliph, the supreme authority in Islam, actually suspended the punishment of stealing, which otherwise is very clearly prescribed in the Quran. If that can happen, okay, this creates a precedence in other circumstances as well. If short selling, which in my opinion otherwise is acceptable in Islamic banking and finance, but if it is creating some harmful effects in the market, if it is destabilizing the market, or it is creating some kind of things which are not in favor of some of the players in the market, then the regulator can take a view to suspend short selling for a certain time period. This has happened in conventional markets, and there is no reason that this cannot happen in Islamic financial markets as well.